Good morning and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at that most recent price action on the 1 hour, 1 day, 1 week time frames. We'll be jumping into the world of data, taking a look at some news, what's been going on there as well, and hopefully having a look at some good trade opportunities that are on the horizon here for Bitcoin. So as I get into today's video, if you do find it useful and informative, smash that like button. If you're watching on YouTube, then you're not yet subscribed, what you're waiting for, go ahead and subscribe, tap the bell, select all the notifications, and you will not miss another video update. If you're watching this on X, then why not go ahead and give us a follow and a retweet? Really do appreciate all of that as well. Helps push the content out to more like-minded individuals. And yeah, let's waste no more time. Let's jump right down into the desktop and start taking a look at what's going on here with Bitcoin on the 1 hour time frame. Okay, so following on from kind of yesterday, it's been quite a boring and slow weekend, kind of as expected. A few things have occurred here, though, which is in the background, essentially creating a reset. This sideways ranging market here has allowed things like the 4 hour time frame to go up to the overbought range, meaning that we can see further downside probably later, latter part of today or into tomorrow, right? So we're still looking for further downside here. Now, taking a look at this currently, to me, it looks like we are either going to be in a triangle or we are going to be in some kind of ending diagonal kind of pattern. Okay, so it's one of those two. Ultimately, our target range hasn't changed. It's 23,287 to 24,113. Okay, so the target range is the same at the moment because it can be either of those options. Let's go ahead and draw in what they might look like, right? So we have the higher range up here, and we have this low range coming down. So we can see that we are in lower highs, and we can also see down here, and I'm going to just roughly draw this in just so it kind of gets the idea of a triangle pattern coming in down here, right? So we have that idea that we are in lower or higher lows here. So basically contracting down into this kind of triangle pattern. Now, for a triangle, we would have to be looking at an A, B, C, D, E kind of territory. However, it would actually be more down here to up here like this. So essentially our A wave comes up, our B wave comes down, C wave, D wave, E wave, something to this effect, right? Now, when we try to map that out, each one of those internal waves, so the A, B, C, D, E, all of those should be three wave patterns, with the exception of an E wave. The E wave could be a couple of different things, and usually the E wave is unpredictable. It can even break out of this before we go on down. Okay, so E wave is the only one that's really unpredictable, but the one that you really want to be capturing, because when you leave the E wave, you're going to be dropping down in a very impulsive break. Okay, so in order to kind of map this out, we're going to be looking at the three wave patterns that we can see in here. We have this double top right here. So this one looks like we've got one right here. And it looks like there's potential to kind of look and move into another one here. So we still have a bit more of a move upwards. I don't think we're necessarily done. I think we are probably just about into going into the E wave, right? I think that's pretty much where we're approaching from the triangle point of view. And I do think that is the most likely scenario. So essentially it will be that we'd have the A wave coming up, the B wave coming down, the C wave here, D wave coming in somewhere around here, looking for that E wave. That E wave can, of course, break up higher. I suspect that it won't push past the 50 EMA, but again, you know, it can. Once we kind of finish that E wave, we're going to be looking for a 5-wave drop, the downside, where we go into our target range. Okay, so that's kind of like what I think is going on here with Bitcoin. I'm going to leave it just like this to make it a little bit easier to see. Wave 4 is a triangle. Triangles can only appear in two locations: wave 4 positions or wave B positions. So if you have an A, B, C structure like this, for example, right, the B wave could be a triangle, or the wave 4 can be a triangle. You cannot have a triangle in wave A, cannot have a triangle in wave C, you cannot have a triangle in wave A, wave 5, 3, 2, or 1. Only two places in all of Elliott wave theory: a wave 4 or a wave B. Okay, so very important that we understand that. So these things are, when you find them, very, very good. They have a good success rate when they play out and all that kind of stuff, but you have to make sure the internal workings are correct as well. This one's actually quite difficult because we've kind of just been stuck in this kind of ranging market here. It's a continuation pattern, but it's good to see it go nonetheless. So we're targeting down a little bit deeper with Bitcoin, and I think we're likely to see that either later today or into Monday next week. So let's move this up into our daily time frame. What does this mean? Well, essentially that fifth wave, when we come down to that 23 to 24K range, that's going to basically complete wave 3 over this bigger macro on the daily time frame, meaning that we expect another wave 4 bounce upwards before we go down deeper into another wave 5. Okay, so expect a bounce once we complete that structured move on our hourly chart, right? And on the daily, we are in an oversold area, so a little bounce like this, which will be significant. We'll look for a 38.2% retracement. So if we take this down towards that kind of level, I think we'll go with 23,950, just to kind of get that roughly where we think it's going to be, somewhere around there. You can see a bounce up towards our 38.2, which will put us back at 26K. So that bounce would basically be approximately 9.3% on Bitcoin. So it will be pretty sizable, but it won't get you back above that 200 EMA, won't get you above the 50 EMA. And essentially, unless you can break up higher than our swing, our wave 1 low. So I was going to say a swing low, but it's actually our wave 1 low at 28,555. Unfortunately, we're going to have the fifth wave move to the downside. Now, if we have this perfect kind of idea of hitting 23,950 and we go up towards our 26K, then we're going to be able to go down to approximately the range down here at 22,656 to 23,440. Okay, that's going to be approximately that kind of area. So I think for the most part, that would then kind of complete this structure here. But one of the things that we need to kind of articulate here and talk about is that if you have a 5-wave pattern like this, then you have to, and it's a starting structure because you can see it's basically where we're reversed, right? If you start with a 5-wave pattern like this, we're going to bounce up quite nicely, but we must finish on a 5-wave pattern, which means there's going to be more downside action here, because if you start with 5, you must end in 5. Okay, there's no Elliott wave patterns out there that just have a random 5-wave structure. 5-wave structures appear within our 5-wave pattern. Okay, so you'd have your 5 waves in wave 1, you'd have your 5 waves in wave 3, you'd have your 5 waves in wave 5, right? It's a 5, 3, 5, 3, 5. Okay, each correction, being wave 2 and wave 4, will contain an ABC structure or a WXY structure. Okay, so you'd end up with a pattern that is known as a 5, 3, 5, 3, 5, right? So we start with 5 waves, you end with 5 waves. Okay, very straightforward and simple stuff, right? And again, this is also something that you can see from your 3-wave patterns, because you can have a 5-wave pattern like this and another 5-wave pattern like this with a short correction in the middle, like that, for example. And that's actually just an A, B, C structure. And so this again, if we break this down, is a 5, 3, 5 pattern, right? And so what we have here are where we start with 5, we must end in 5. We start with 5, we must end in 5. And where are we right now? Well, we have 5. So we go up in 3, we come back down in 5. And so essentially here, from an Elliott wave theory point of view, it's quite straightforward. Start with 5, end in 5. It means that we can have a short-term rally. We might be able to come back up to the previous area of resistance, maybe even tapping back in 29K. It does not mean that you're done with this move to the downside. It just means it is a nice rally that's corrective, and then we just drop back down again. Sometimes it doesn't even have to go that high. You can have a short rally and another 5-wave drop to the downside. Okay, obviously you want to try to avoid the 5, 3, 5, 3, 5, and you ideally only want to see a 5, 3, 5. That will kind of minimize the damage, but for the most part, you have 5. Got to have a second 5 afterwards, minimum expectations. And so on the daily time frame, yeah, we've got some downside. Let's take this up into a weekly time frame. Now, the weekly time frame is obviously going to have a weekly close today, and the weekly close today is going to be a bit of a challenge for the bulls, I think, more so than the bears. So depending on how today goes, we might see us losing the 200 EMA support level. Now, we can wick below the 200 weekly EMA. This is not a problem. But if we were to close below the weekly 200 EMA, all of a sudden, I think we're going to start having problems here, and we're going to slip down even further. Now, I already have the inclination to think that Bitcoin's already going to lose this 200 EMA on the weekly time frame. The only difference is that we could, in theory, close this weekly candle above the 200 EMA, continue down next week, finishing off our structures at $23,000 Bitcoin, and then bounce up above the 200 EMA the next week. It will give kind of like a false hope, but at some point, we're still going to have to drop down lower than that 200 weekly EMA, and I do suspect we are going to lose it. So if we don't lose it today, we'll lose it probably in the next week or so. Now, where is that 200 EMA? Well, this is the Bitcoin USD Bitstamp data, and it currently sits at $25,664. Okay. However, if you take a look at this on a USDT pair, it sits at $24,648. Okay, so there is a slight variation in that 200 EMA depending on what your pair is, and it will probably also vary a little bit depending on your exchanges. We're using Binance in the weekly timeframes here, whereas we are looking at on our daily and on our hourly chart, we're using BitGet data, right? So there is a slight differences in there, but for the most part on the weekly candles, we will be looking at trying to get down where possible a little bit deeper. We do suspect we are going to be getting into that kind of 23K range, 22K range at a later date as well. So yeah, we're going to be losing these 200 EMAs over time at the moment. One of the things that we can see quite clearly on our weekly time frame is we're going to close below the 50 EMA, unless of course we can rally up higher. And currently the 50 EMA on the USDT pair comes in at $26,938. So for the most part, it's not going to be looking great on the weekly timeframes, in my opinion. So let's go up into the data. Let's start talking a little bit around that. We'll kick things off over here. So obviously on our membership website, membership.cheekycrypto.io, linked in the description below, we have several different plans and different kind of perks and benefits that our members can get hold of. There's a 7-day free trial across all of the plans that we have. And that's everything from, private Discord community, AMAs twice weekly with Chris and myself and the Cheeky team, all the way through to trading stuff that we do. We have alerts, we have data and education, so much, right? I don't want to go through it all, but again, check this out at your leisure. It's linked in the description below. In here, though, we do have something for the data zone. And in this data zone, we have something called Bitcoin. And if we come over to the Bitcoin data, we can actually take a look at some stats on Bitcoin. We have an overview, which is what you see here. We have exchange-based data, liquidation-based data, and Bitcoin wallet-based data, which you guys hopefully know about by now because I talk about it a lot. So we're also going to increase some of the things on here as well. So we'll look at some of the stuff over the next few months. This is going to get even bigger on the data side. So anything of note at the moment? Well, in the last 24 hours, we've seen 868 Bitcoin get issued, a new mining operation. We have a yearly inflation of 1.8%. It is not massive. Halving this down at the Bitcoin halving next year isn't going to have a huge impact on the supply, which means you're not going to have a huge impact on price, because ultimately, to drive price, you need to affect the supply, the demand, and halving your inflation rate from 1.8 down a little bit isn't really going to be a huge benefit to shrinking the supply of Bitcoin, not when there's 19,462,325 BTC in circulating supply. So it'll have a little impact, but it's not exactly going to be a big driver for price. We have to focus on what's going to shrink the current supply outside of the halving, in my opinion. Nonetheless, it's a good story. People can understand the Bitcoin halving very easily. It's not a complex subject matter, and therefore it can drive a little bit of retail FOMO just because people think it's going to the moon. I mean, just take a look at Litecoin as an example, right? It's a bit of a sell the news thing more than anything else, and I think Bitcoin will be a very similar situation as we had seen in the previous cycle as well. So let's go ahead and take a look, right? $514,000 in fees in the last 24 hours for 492,000 transactions, million active addresses out of the 48.5 million active addresses. We have a market cap of 509 billion, but we know that market cap is only price multiplied by circulating supply, meaning that it does not represent value. It does not represent liquidity. It does not represent the amount of money that's gone into a project or gone into Bitcoin. It represents the idea of value. It represents the theory that something has value or Bitcoin has value. It actually does not represent much, and it is actually a metric designed to confuse retail investors, in my opinion. It is not like the stock market where you have company and the company's missions and performance is what drives their market cap, right? And you have people buying the stocks and so forth. Here, we do not have the very same thing. We have a very wide and distributed supply that is not part of a centralized entity as such. And so it's really quite difficult to be thinking the market cap represents the same, okay, specifically when new issuance occurs and things like that. Think of it more like the gold market cap and silver market cap, metals and things like that, where all of a sudden you could find an additional amount, and it's not really relying on the performance of a few individuals or anything like that. So the market cap can be quite misleading. It's not a metric that you want to look at and say, oh, the price can't do this because market cap would be X, for example, right? It doesn't make sense. And so really break down what market cap is, and then you'll start to understand it. It's not something you're going to want to kind of pin all your hopes and dreams on, because essentially the market cap is very, very misleading. Let's move over into liquidations. In the last 24 hours, we saw $10 million of Bitcoin liquidations. OKX was the exchange with the biggest amount of liquidations at $4.77 million. The 42.1% of positions were long that got wiped out, with 57.9 being shorts that were liquidated. Okay, so basically, OKX represents 47.39% of liquidations. Binance was 29.64% of liquidations, Bybit with 13.42%, Huobi 8.2%. After that, it drops off. There's not enough volume anywhere else, right? And so very interesting to see the dynamic between different exchanges, but we'll probably come back to that later. From the wallet side of things, we can take a look and take it and see, what is going on from large investors to the smaller investors. So in this particular example here, we can see this is a wallet that has over 1,000 Bitcoin. So how many wallets have over 1,000 Bitcoin? There's 2,009 of them, okay, and they've been on the decrease for quite some time. The last 365 days, they're down 6.56%. 180 days, they're down 1.18%. Last 90 days, down 1.37%. Last 30 days, down 0.4%. Last 7 days, 0.45%. What you'll notice is that they were very steeply selling last year, 2022, and they've not really been too aggressive with coming out of their positions in the last, little while here. So the latter part of this year, you can see that they were selling into the liquidity at the higher side here. They haven't been buying it up. They haven't been kind of forcing price to the upside or anything like that. They've been, slowly coming out. Not as aggressive as they were previously, but you can still see here there's not a positive story from the whales. The whales have been selling, not buying. Now, if we jump this up into the 10,000 BTC or more, now this particular level is actually quite an interesting one, because these wallets seem to act rather illogically if you were to look at it just from the price action point of view. From the price action point of view, these particular wallets look like they are buying up in the bear market and that going to the moon and all those kind of things. However, if you take a look at 2018, they did a very similar thing. They were buying in the bear market, and then they basically just flooded the market with excess supply, dragging the price down into the actual bear market low in December of 2018. You can see that this big straight drop to the downside. Now, we don't have something as similar as that occurring right now, but they have taken an opportunity here with this move to the upside, and they've been taking and draining the liquidity out of the market. Okay, and again, you can see over the last 365 days, they were up 9.18%. However, over the last 180 days, they're down 5.31. In the last 90 days, down 6.14. And in the last 30 days, down 0.93. And the last 7 days, down 0.93. This tells us that essentially they're not backing the price of Bitcoin here. They're just looking to drain the liquidity out of the market. Okay, so they are buying quite aggressively during these lows. Prices are higher than when they were aggressively buying around the kind of September and October time into November of 2022. And they've basically used this move to the upside to drain the liquidity. Now, we are still waiting for them to kind of drop down much more aggressively. The wallet counts when they actually had finished flooding the market back in 2018 went down to 96, but they were as high as 126 wallets. Okay, we're currently on 107. You can see that 365 days ago we were at 98. Okay, so you can see that there's a few wallets that have increased here, but for the most part, it's not looking like a good story for 2023 when all they've really done is aggressively dump on the market and extract liquidity from it. So we can jump down into traders if we want. These are all flat because, again, these are just trading the price action. So 100 Bitcoin or more. These guys are literally just, trading the price, and they're not really accumulating anything over a long period. You can see that they're all flat, but they're all down still. So there's not, aggressively buying into anything. They are doing exactly what a trader would do here, basically take advantage of the market and drain liquidity. Now, obviously, that's the higher side, right? And we could go into all of those other wallets here. From the retail side, it's very clear what they're doing. They're just buying because they believe that they're in a bull market. So 10 Bitcoin or more is up in the last 365 days by 4.69. In fact, they're up on every metric that you can see here. They're just buying, buying, and buying. You can see the same thing and the same story when it comes to the 1 Bitcoiners. So retailers are buying here, 13% up in the last 365 and up on every other day as well. Ultimately, retail is buying and large institutional investors are selling. And it's up to you guys as to whether you believe that the retail is on the right side of the trade. I know where I sit on that argument, and it's not a pretty sight. Let's move over into the news. What have we got? Well, here's when Bitcoin could bottom after crypto market downturn, according to Glassnode co-founders. And well, it's an interesting one. There's a couple of takeaways here. I'm not going to read the entire thing because I don't really mention a date. And so therefore the title's a little bit on the misleading side of things. But we can obviously go down here a little bit deeper. They're saying there's a couple of options. And obviously that's going to be the kind of main takeaway. There's a couple of options, right? One, it's going to be a slow bleed to 24.25. No, I disagree with that. And you kind of know that from the technical analysis that we just did earlier in the video. We're looking for those impulsive structures. We are going to be going down lower than 24.8. That's kind of a given at this point in time based on the current performance that we see. We're tracking people's behavior. People's behavior is telling us we're likely to see 22. So we can rule out scenario number one. Scenario number two is a fast, aggressive wick that gets brought up fast. I don't think that's going to happen either. So basically, number two also isn't going to happen. So there are two options I don't agree with. I think there's going to have to be another option, which essentially is that we're just going to play out our structures. It's going to be fast in places, but it's not going to get bought up quick. We are going down deeper than what people want to believe. And this entire article here basically wants you to believe otherwise. But they do actually kind of point this out down here a little bit deeper when they say you got the green box and the orange box, right? We take a look at the double top, which again, I disagree with this being a double top, but it is a bearish signal nonetheless with higher highs and no volume in it. But in here, what do we see? Well, the green box basically is this choppy move to the downside, very corrective, right? And basically, when you have an overlapping candle pattern like what you see within this green box right in here, this essentially tells us that it's a short-term move, right? However, when you have a big move to the upside, okay, you can then actually take a look at that, or big candles like this one here, or the red one, for example. These are more of an impulsive trend-based pattern and actually show that there's volume there, right? However, on the way down, we've gone straight the way through all of those support levels, and that's kind of what they're saying here. This basically tells us that there's not an appetite to buy, and that is not a surprise, okay? And they also tell us that the selling pressure has not yet peaked. And that basically means that we're still going to be further downside. So they are telling us that there's further downside, even though they're not willing to acknowledge it within their two options here, okay, because they seem to think that you're going to find good support around that 24.8, right? That's kind of where they're thinking. But for the most part, that's not likely to be the case. We're going to get some bounces in places, but we are likely to move on down lower than $24,800, in my opinion. So you can let me know what you think about that in the comments below. I mean, I like Glassnode, but they don't actually cut their data in a user-friendly way, in my opinion. It needs to be a little bit more analytical. Like, it's great to put data out, but let's kind of actually draw it in a way that's more useful, in my opinion. We can, of course, see that the US national debt surges by $116 billion in August. And so basically, the Heritage Foundation warns America at risk of reaching a point of no return. They've downgraded them as well. They were a AAA. They've now gone to AA+, which basically is still an investment grade territory. But it does mean that they shouldn't really ignore this. There's low odds of defaulting and things like that. But ultimately what they're saying here is you cannot continue in the way that they are. The current $32 trillion in debt, in the interest payments annually are about $1 trillion. So like you're not getting any better, right? And there's a spiral that goes on here as well. They need to get their house in order and they need to fix this out. Basically, it could mean that they end up with higher yields, which will lead to higher interest payments, which means even faster growing debt and so on. It's a death spiral essentially. Time is running out and before they reach the point of no return, right? Very, very important stuff to kind of, get their heads around. They need to sort this out because otherwise inflation is going to be a thing again. Interest rates are going to just go and skyrocket. And unfortunately, I think that's going to have a big negative impact on the entire market. Obviously, we can see some other interesting things occurring. So a US bank is denying access to funds and freezing accounts, leaving customers in dire financial straits. I haven't actually read this one, but the title was interesting to me. It doesn't surprise me that banks do this. There's many banks around the world that basically are refusing people to have access to funds. We see this from time to time. Over and over again, depending on various different countries, bank runs have occurred quite frequently. So Green Dot Bank, which offers banking and debit card services to people who shop at Walmart, is accused of giving the runaround to a group of customers who are essentially locked out of their accounts. The bank, which has 33 million customers, initially said account balances and transactions were impacted by an issue with a payment processing partner. Now the bank says its system is fully up and running, but customers say the problems persist. At the time of publishing the article, the web outage tracker UpDown Radar reports a possible outage at Green Dot Bank, with complaints in the comment section coming in by the hour. NBC tracks the troubles of Tennessee resident Sarah Morgan and Florida resident Mary Cannon. Morgan told NBC her account has been inexplicably frozen for 6 days and counting, forcing her to take on debt to make payments. So read into that. I mean, maybe more people in the comments know more about this one than I do. I didn't read this until literally now, but the title did catch my attention because I do think we are going to be seeing more banking crises around the world, but specifically in the US. We saw a fair few collapses and I don't think that's done yet. I think we're going to see more. We are going to see only really a handful of mega banks by the end of all of this crisis, I think. So one to watch out for. I suspect more in the future. This brings me over into exchanges, right? It's important when we're talking about kind of banks and exchanges that we set ourselves up for success in the future. Where possible, you want to be self-custody of your own cryptocurrency. For that, we like the ledger. Devices, hardware wallets, not software wallets. These are important definitions because a hardware wallet is only going to be connected to the internet when you physically plug it into a computer, put in your passcodes and all that kind of stuff, right? And you're going to have to sign every single transaction that ledger device wants to do, right? So whether that is sending your key phrase over to ledger, you're going to have to sign that transaction when it's connected to a computer. It's not a backdoor, it is hardware. Understand the difference between hardware, firmware, software. Very important. So I like ledger devices. I understand what ledger devices are. I understand how they work very nicely. And ultimately, it's a great way to look after your cryptocurrency assets, keeping them off of the exchanges. But at some point, you're going to have to interact with exchanges across the board. And for that, you're going to want to make sure that you have access to as many different cryptocurrency exchanges as you possibly can. Okay, and the reason for this and the rationale behind this is you do not know in a bull market which exchanges are going to A, exist, and B, which ones are actually going to be online and accessible to you. Okay, and the same thing happens with banks, happens with cryptocurrency exchanges. When there is a high demand, it is incredibly difficult to get your money out, right, essentially. And so in the case of cryptocurrency exchanges in a bull market, it's really hard to log on. Millions upon millions of people are all trying to log on at the same time. They're trying to sell their cryptocurrency assets. And the exchange goes down. It's just not enough bandwidth to deal with that amount of volume of people all at the same time. So by having access to multiple different cryptocurrency exchanges, you set yourself up for success in the future. Personally, 𝗕𝗘𝗪 is my personal favorite at the moment. I do 100% of my leverage trades there and 90 to 95% of my spot trades there. There's an affiliate link in the description down below for 𝗕𝗘𝗪, and if you do use that link, then you're going to be eligible for up to $8,000 of rewards, depending on how much you deposit and trade on the platform. If you use that link in the description below as well, you can take part in some of the other fantastic things that are going on at 𝗕𝗘𝗪. Everything from the trading competition that we hold ourselves down in our Discord server through to the competitions that they hold more globally on the platform as well. So why not go ahead and check it out, linked in the description below, and sign up to it. I don't think you will regret it. And of course, 𝗕𝗘𝗪 is not the only exchange I'm registered with. I use Binance, I use Coinbase, KuCoin, Gate.io, Crypto.com, and so many more. Okay, it's important that we understand how to deposit fiat, how to deposit crypto, how do you withdraw your fiat, how do you withdraw your crypto? Do you need to link a bank account? Do you need to do KYC? All these things are very important. Make sure you're familiar with them. Make sure you get them all set up correctly and get yourself ready and set up for success in the future. Which brings me on over into the idea of our trades. Have we got anything that we kind of want to be doing from a trading point of view? Well, I think that we have the ability here to think about maybe shorting Bitcoin latter part of today. I would be waiting for that E-wave to see where we kind of go, but I do think that we have the ability here to kind of short the market with our target range being down here at 24,113. We might have to put the stop loss above the 200 EMA. I think that would be probably one of the safer places to kind of put it. Gives us a risk reward ratio of about 1.6. So maybe this is the opportunity to kind of do. We'll just have to kind of find out where our E-wave is going to end to kind of get that entry, but for the most part, I suspect it's probably going to be around that 50 EMA, and then we'll be able to short the market into the fifth wave low point. Okay, so for the most part, I think there's going to be some good trading opportunities here, because once we finish the short position, of course, we want to flip that and turn it into a long position for our wave 4 bounce, and again, that's going to be very lucrative as well. Okay, so we can trade this in both directions, and of course, because these will be leverage-based trades, I'll be trading on 𝗕𝗘𝗪. Okay, that'll be my approach to this one. I do think there's going to be some fantastic opportunities from a trading point of view when it comes to BTC. Guys, I'm going to leave this video right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.